So this morning we've got the S&P 500 continuing to head up. Same thing with the NASDAQ. The dollar index is a little bit higher here this morning. We've got the Dow 30 or the US 30, a little bit choppy here this morning. British pound was up. Same thing with the euro. They seem to have come back down. We're going to talk about why that might be in just a second. We had some European PMI numbers that came out. And then we have oil, which cannot seem to catch a bid. Trying to bottom out a little bit, but we'll see where oil goes. And then gold is back below 2,500 at the time of us streaming this. So let's jump into some individual charts here. First thing I want to talk a little bit about is the dollar index. So the dollar index catching a little bit of a bounce here, maybe finding support around this 101 level. And the big reason, or at least one reason that I can speculate, is that the PMI numbers out of Europe this morning came in a little bit light. So let's take a look at this. So you had French flash manufacturing PMI came in lighter than expected. Services came in better than expected by a pretty good margin. The German economy, which is of course powerhouse of the EU, came in lighter than expected on both fronts. So a little bit of weakness on the German PMIs this morning. Flash services PMI for Europe came in overall slightly better than expected. Actually, better than expected. And then if we keep going, GBP numbers came in both better than expected. This is interesting because, the UK PMI numbers coming in like this is just a good, solid growth. I had a good question from somebody who, I've worked or spoken with back and forth about markets for a while now, Dan Emerson. He sent me a message asking about, my thoughts on following a rate cut in the United States. Would that cause growth acceleration? I mean, he's a very smart dude himself, but he was asking my thoughts on it. And, he was pointing out that the PMI numbers here for the UK came in kind of better than expected here. So, following rate cuts, which the UK has had their first one, the question is, does that lead to continued bounce back in the economy? And, we'll have to see where that falls going forward. But at least right now, these are pretty solid numbers. Manufacturing and services both nicely above 50, right? That's signaling growth. Not bad. That being said, we could take a look at some individual currency pairs here in reaction to this. So if we take a look at euro, here's the euro, slightly lower here this morning. PMI numbers were not horrible, but again, if we go back to this, some mixed response here, right? German PMI is coming in very light. They revised the previous ones higher. Seems a little bit mixed across the board. But if we look at like the UK's, yeah, we can see why the pound is slightly positive today, because you've got UK PMIs just coming in nice, coming in strong. So the pound has been strong, but I've been looking for a chance to buy it on a dip, but doesn't look like we're getting that dip right now. Here is the fibs level here. So, the 38.2 would be a pullback to this area. We might not get that for a little bit. And honestly, even if we do start to see a pullback, we might see buyers, if that happens around that 1.3, I would actually take that attempt, even though it's not quite at the 38.2. It's such a key level of support. And key level support and, fundamentals that kind of make sense for me right now in the pound. Pound US dollar is getting a bullish rating on the Edge Finder. So again, I've been watching this one for a little bit, but a pullback in the pound would be interesting to me. Let's do this. Let's remove minor currency pairs, and I'm going to just do take out neutral readings. So these are my current watch list figures here, or charts to watch. All right, look at that. 232 came in as exactly as expected, and that's going to make the market just whipsaw, most likely. Unemployment claims coming in right in line. Dollar index slightly higher on this. S&P, Wall Street, or US 30, NASDAQ, they briefly dipped and then came right back in. Interestingly, gold is lower on this. Let me go look at gold, because I have been interested in potentially getting a buy setup going on gold. If it keeps coming down, I would like that to happen, because then I could get an entry on that. I'd still say we're a little bit off from where I can get a buy setup going on gold. But this one also has an edge finder setup as well. Gold right here. We're getting that bullish rating when looking at all this stuff.
This week, we're doing free access to the Edge Finder. If you're interested in our market scanning software and want to try it out for the week, listen up. At the top of the description and pinned in the comments down below, you can find the link to apply for free access to the Edge Finder for this week. Again, you get access for this week only, so try it out before it's too late.
I show you guys regularly live broker logins. I'm floating some really nice trades right now without trying to come across arrogant. I've got some really nice positions rolling. Like the S&P 500 trade, we're up almost $38,000, which is an insane number, and something that young trader Nick would have been like, no way you're ever going to have that kind of trade. My quote unquote aspirations in trading have come true, but it is blood, sweat, and tears behind becoming profitable. That's the first part. The second part, should you copy signals? So I'm showing you these sorts of results. I don't copy signals. And the only way I know how to get to this point where you have trades that periodically, not often, but periodically look like this, where you get a nice runner going, is through a lot of hard work, a lot of practice, and learning this stuff. Not to mention, guys, I was down almost 6 figures before this bounce back, sprint that I've had recently. So please understand, I'm working on a larger capital basis. Currently, my account is floating almost 87 grand, which is insane. That is an insane amount of money. And you also have to accept, though, that, please understand, when I'm showing you this, in the last month, this is also just me working back out of a drawdown, in which case I think I was down 90 something. So I had a losing streak, many losers in a row, which happens to me sometimes. And sometimes I also have really big winners. So it's very important that you, as an aspiring trader, if you see me, I go back and forth on how often I want to show my trades, even when they're going well, because they can be motivating to some, but other people are like, how can I do that? I want to trade like you. I want to be like that. And they jump the process, that the pain, the blood, sweat, and tears, the hours spent learning this stuff, right? But I show my positions and my broker stuff because I also want people to understand that I really do this stuff, and that you really can make money doing this stuff if you are patient and work very hard at it over a long time. So the question of, can I just copy your signals and make money? Technically, on a mechanical basis, if you took all the trades that I took perfectly with the same sizing and everything, then yeah, you'd be up money. But you're not up hundreds of percent. For me, I'm up 13% this year, somewhere in that range. And it's one of my better years. It's a good year, 13%. Where people who don't understand trading mess up is they copy people's signals, they leverage the crap out of things, they give up on them when they're not working well. Copying signals, I'd never encourage it, because if you don't have the mindset of the operator behind those trades, if you're not willing to sit through drawdowns, if you're not willing to, you should not copy anyone blindly. If you don't want to put in the work of trading, this is my honest opinion. If you do not want to, if you're like, I just want to copy signals, this is too hard to learn, First of all, number one, don't copy signals. It won't work out well because you're going to make trading mistakes. If you have to be the operator, but you don't know how to operate yourself, even copying signals, people can mess up. I'll give you an example. If you copied me, this is my performance, right? This was my performance for a lot of this year. This is what it looked like. If you copied me blindly during this time, you would have thought I was a hero. You would have thought, oh my gosh, this guy Nick, he's too good. And then during this time, you would have said, this guy Nick sucks. That's how I felt during that time. It's real, right? I mean, it doesn't feel good to enter a drawdown. But what most retail traders will do is they will mess up even a good thing. So even though the overall result of this is a slow and steady return, it's not a blue line to get there. It's a green line. You have great periods, and then you have terrible periods, and then you have great periods, you have terrible periods. And if you're good at this stuff over the long term, more money comes in than goes out. That's all it is. It's not an easy flow of money into your account. That is simply not how trading works. So my point with showing you that, guys, is that if you copy people's signals, what people will do is when things are going like this, they'll get greedy and they'll take huge bets on people's signals. They won't properly manage risk. Are you kidding me? No, I'm just going to copy this guy. He knows what he's doing. I'll just copy him and make a ton of money. And then when this happens, they lose even more than that. Like they lose massively because when the drawdown happens, what do? They lose huge because they were leveraging the trades and they don't know what they're doing. So they're just like, oh, I'm just throwing a bunch of money on this. See, this guy never misses. Everybody misses at some point. When this happens, if you're just a signals copier, what do? You blow your money and you say, this guy sucks. He's not actually good. And then guess what happens? Those people quit. They move on. They blow their accounts. And then what happens? Another win streak starts. But everybody who was just trying to cheat code their way to making money by copying signals lost everything. James, you probably have already covered it 17 times, but I was looking at gold dropping pretty hard right now ahead of the PMIs, which come in just about a minute and a half. If we switch over to my screen just for a second, we can just watch the reaction on all the different charts here. Let me hold on. I need to share my screen. Share screen.
Nick, do you encourage news full porting?
Of course. No, I don't. No, it's you got to be careful with that stuff. And I really think that with news, there's not really like a predicting it kind of thing, but rather reacting to it can be pretty powerful. Like what does it actually tell you about the markets? What I'm looking for, James, out of this is, we got PMIs coming in about 45 seconds here, flash services PMI and manufacturing PMI. What the market, I think, wants to see is some strength here. People want to see, okay, we know we're going to get rate cuts in September. If the stock market's going to go up, we want to see that hold steady. If you want to see the dollar go up, you also want to see that strong. So got about 20 seconds to go here. Services coming in, expected to come in at 54. Manufacturing expected at 49.5. We'll see. But again, there's no predicting that. We got breaking news coming in here. 10 seconds, guys. All right, we got all of our different charts here. All right, PMIs. Dollar is moving higher.
Yep. 55.2 and 48. So
okay, so 55.2, a little strong on the services, which is the larger component of the U.S. economy. So that's nice. And you said what was the other one?
1 sec. 55.2 and 48.
Okay, so a little bit of weakness in manufacturing and some strength in services. This is like the standard nowadays for these two. Manufacturing kind of weak, services staying strong. And just to reiterate what I mentioned by that is the services component of the US economy is the much larger. We're more of a services economy. Same with like the UK and a lot of first world countries. They are larger on the services, except for China. China, very heavy on the manufacturing as well. So something to mention there. But market reaction here, you got the S&P 500 hanging on to its gains here, dollar index bouncing back, and that gold chart down below the 2500s. We might be seeing a pullback. I'm kind of interested in buying the dip on gold if I can get a good setup. What are your thoughts on it, James? Are you bullish? Do you think it's due for a bigger retracement? What do you think?
I will buy it. Yeah, it's more a case of waiting. So I like to wait for a bullish candle just to confirm that we are slowing down in sellers. So if we can see a bullish candle form off this level of previous resistance, it would look quite nice. You know, this is a fib level, it's previous resistance, it would be a break and retest pattern. Technicals all line up. I'm still in the mindset there's nothing really to drive gold down, especially as we head into, as you said, we've got elections and we've also got rate cuts coming. So this might just be a short-term pullback in gold to, potentially allow some long positions to get in.
Yeah, I like it. I like it to the upside. If we get a pullback into like 2470, I like that area a little bit as well. Here on the daily chart, you got this big level of resistance, and then we broke to new highs. Now retesting those levels. I think this is just classic, technical price action pullbacks. PMI is coming in a little stronger than expected on the services front. Does tell you like, okay, the U.S. economy is hanging in there. It's not particularly great for gold per se, but I still think, as you just mentioned, there's enough factors overall that outweigh the bear case here. And I think that we probably continue to see higher prices on gold this year. So we'll see.
Oil looks interesting to go short, actually. So what we saw was a large move in oil when we saw tensions starting to rise again in Russia, Ukraine, and in the Middle East because of supply and demand, obviously. Now, those tensions are sort of relaxing a little bit. There's been more talks of ceasefire, and there's no escalations going on at the moment. So there's been a lot of outflow in oil. There's been a lot of pricing out. So people aren't expecting much more conflict or much of an escalation to go forwards. So what this means is that oil is heading to the downside. Now, if we pair this with other outside data, such as poor Chinese data, oil could continue to go to the downside. And I'm looking at this daily level through here at around $63 a barrel, roughly. Now, if we take a look and if we can decide if this data is going to continue to be poor for oil, we can then take a look at seasonality. Now, this is a tool called Season AX. It's built purely for seasonality. So if we look from the 10th of October until the 23rd of December, and this is taken in the past 10 years of data, we could see quite a large decline in oil prices. So if we took a long position for the past 10 years, exactly on these dates, you would have won 3 trades and lost 7. So seasonality is in favor for a bearish oil to end the year, which could be quite a nice indicator to go short. Now, again, that's for October. We've still got over a month until that becomes valid. So we'd have to, pay attention. But if we can see a nice pullback on oil here, so let's say we can reach a sort of 50% pullback. So somewhere around here would be beautiful. That would meet the 200 daily moving average. It would also allow the RSI to become a bit higher and potentially getting to a short position and take a stab with a stop above the previous high and a take profit down at sort of $63 roughly. So I think oil looks good to short. It's just a case of waiting, really. I don't think right now is a good time. So, you can see we're at this level of daily support and we are a little bit oversold in the short term, I think. So yeah, that's my view on oil for now. But yeah, obviously I'll keep you guys updated. Just don't get caught in the trap of buying support. Although this looks tempting, and I was looking at this support this morning and I was like, oh, it just looks really good to buy from. Really nothing support to buy other than this support level. It's pretty mediocre at best. Anja, hello. Why is AUD-NZ decel? I assume you mean on the Edge Finder. I mean, I don't know exactly how the Edge Finder works with algo, but from what I can see and understand, the Edge Finder doesn't take into account hawkish and dovish tones. It takes into account the current data. So, it can't predict if a central bank is going to hike rates, cut rates, or if it's hawkish or dovish. So it takes into account, what is the data right now, and does that lead to a buy or a sell signal? But again, take that with a pinch of salt. I didn't have any involvement with Edgefinder, so maybe I'm wrong. EuroCAD longs. I'm actually in EuroCAD shorts, and I will show you why. Just give me 1 second. Let me pull it up. So again, this one's going to go back to some seasonality. So if we go, actually, let me pull this up here. So if we go from the 25th of August, which is coming up, until the 7th of September, we can see a huge decline here on EuroCAD. There's also obviously some economics, which unfortunately I can't go into right now. But yeah, we are in some short positions on EuroCAD that actually don't look too great right now. So you can see I've got 2 entries. This one should be renamed to 2. So yeah, I've got 2 entries here. But yeah, looking to short this one into sort of early September, roughly. You have CME that gives some general idea. General idea on what? Yes, I subscribe to Season X. What about NASDAQ? We can definitely take a look at NASDAQ. So I saw an article this morning actually by investing.com saying that although NASDAQ is running up, a lot of funds are fading this move. So it means they're shorting, which I don't really think is a huge deal. I don't think that the indices are suddenly just going to start dropping. We are at quite a nice level of resistance. So it wouldn't surprise me if we do see some sort of pullback or a little bit of a correction in price. You can see the daily is pretty extended. We're really oversold on the RSI. Although we have bounced off this moving to 200 moving average really, really nicely. And we've recovered a lot of the risk off move. Let's see actually by how much. We've recovered 15.5%, which is huge. That it's been a very easy trade for anyone that has been a bull on the indices markets. You can see I took a trade here. Unfortunately, I didn't hold it for too long. But yeah, I did manage to profit from this one in a little bit. So if you're not already in NASDAQ or the indices in general, I would be looking for one of 2 situations. So I'd be looking for either the break and retest of this level of resistance. Let me just make that a bit smaller, something like this. Or I would be looking for a pullback and a continuation. So something along these lines. One of these 2 would be fine for me. Happy to buy pullbacks in NASDAQ at the moment. The trends are bullish in my book. The daily's bullish, the weekly's bullish, the H4's bullish, the hourly's bullish. The market drivers for NASDAQ are bullish. So yeah, no issue there with me. Lower market sentiments in oil. Yeah, oil isn't looking great at the moment, to be honest. I was looking to go long, but that idea has been completely washed out once I did some research. Now, gold looks good. I am tempted to take a long position on gold very soon, actually. So I was looking at this level of resistance through here. If we draw fib from low to high, we can see that this level of structure lines up really nicely with the fib zone, so the 50% 618 level. And yeah, I think I'd have to have a relatively tight stop on gold, I think, because if this level is broken, I could see a larger move to the downside. So if we do break past this level of resistance, wouldn't surprise me if we come down and create a higher low in relative comparison to these lows through here. Because that's what's happened, previously when we created all-time highs, we had quite an aggressive sell-off or profit taking. So that's something you need to be cautious of. But generally speaking, I think gold has a lot of room to continue moving up. It's approaching a really nice level of structure to buy from, so no issues buying here and taking a little stab. In terms of targets, I'd be looking for 3,000. Now 3,000 is, it's a long time away. It's not something I expect to be hit very soon, possibly not even this year, but it would be one I would be quite happy to hold and just trail stops up and up and up and just be quite aggressive with trailing the price. Although, this would be, like a 1 to 13 or 14. So it'd be quite ambitious, but not impossible if managed properly and executed well. So yeah, it's something to definitely look at. We are really approaching. If we can get this level hit, actually, I might take this trade on stream if we can get it. Can you look at GP New Zealand? Yes, I am actually short on pound New Zealand. I need to close out of this position. Actually, we do have what is it? So we've got retail sales for Q2 coming out tonight for me, my time. So yeah, I kind of want to get out of this. It was a bit of a higher risk trade compared to what I would normally take. But in terms of technicals, again, fib from low to high, rejected the 50% level really nicely. We were in a downtrend on the daily using the fast moving averages. So at the time, it made sense after a bearish engulfing daily candle. But yeah, it's not been sustained. So I think might just close out of that one later today before news. Pound Australian. I'm quite bullish on pound Australian, actually. Sorry, bearish on pound Australian. And the reason is because I don't like the pound. I think the Australian dollar is quite healthy at the moment. And we are actually retesting this level of resistance, which I don't mind actually. The H4 is overbought, so you can see that on the RSI. So I wouldn't be taking a trade right now. The daily looks quite bullish and the weekly looks quite bullish, but generally speaking, shorts don't bother me too much. So yeah, I think the only case I would possibly consider going short is if we could close bearish off this level of resistance. I'd be looking for a relatively small take profit above this 200 moving average. So, you know, maybe a 1 to 2 at a push. But yeah, nothing too aggressive. And I don't really think there's even a trade here, to be quite frank. What we're buying today, maybe gold, but we'll see. Don't take that as a signal. It's just my opinion. The Russell will fly potentially. I don't trade the Russell. Dollar CAD. Yes, dollar CAD. So it's quite interesting, actually. The dollar sold off quite aggressively recently, which I'm sure you're all aware of. However, we did see quite a strong pause at this level of support, and we are seeing some very small bullish movements today, although it's not, you know, nothing overwhelming. It could potentially be something. So in terms of dollar CAD, what I want to see is a slight correction on the US dollar, leading into a pullback on dollar CAD, and then potentially getting short. And this would allow me to be short for the cuts in September. Although I don't like the dollar CAD, generally speaking, I think it's one of the worst markets. I wouldn't be opposed to taking a trade if the data aligns. I think the CAD is quite robust. I think US dollar has some more room to the downside into September. So yeah, we'll see. But this is kind of what I'm looking for, but it's quite rough at the moment.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.